Good morning and great to be here. We pin it primarily on the Delta variant and concerns around that. If you look at some of the data that's been coming out of China and the US, which account for over 30% of oil demand, in China specifically, we saw air travel was down close to a third last week, which is a pretty significant drop. And we're seeing lower mobility across the board globally. And we think that spooked the oil markets earlier in the week. The good news is supply has been pretty accommodative. So OPEC at their last meeting only raised production by 400,000 barrels, and they're only reaching pre-pandemic levels by September of 2022. So even though the dollar has been trending a little bit higher, as you mentioned, we have a CPI inflation print coming today. We do believe it's going to be pretty accommodative on the oil side, and we don't foresee any kind of major downturn in the future. We envision it holding within this high 60s, low 70s range.
Well, excellent overview, Rohan. And I want to come on to the supply side of the equation in a minute, but just to round out the discussion on demand, when do you see global oil demand returning to pre-pandemic levels?
We're on board with what a lot of the agencies are saying, what the IEA and the EIA are saying, and they believe that once we reach 2022 or in the second half of that year, we're going to reach pre-pandemic oil demand. And that makes sense considering many countries are at least progressing in the right direction towards vaccines, even though we do have variants starting to pop up and they're spreading. Most countries have very successful vaccination programs, especially on the more developed side, like in the Europe and as well as America. So we do think right now that in 2022, that's really the year to think about. 2020, 2021, obviously those have been sort of lost years on the demand front. But we do think that, especially with accommodative Fed policy right now, and UK central bank policy and many other central banks, that we should start to see demand tick back up into 2022.
Okay, 2022, so that's when we're looking at a return to pre-pandemic levels on the demand side. On the supply side of things, there's been a really interesting dynamic evolve in that private companies, Western private oil companies, are not reacting to a higher oil price the way they historically did. Typically, when the oil price would rise, we'd see the likes of Shell, Total chasing it higher. But now with pressure from ESG shareholders, they're not doing that. What is that dynamic doing, and what does it mean for potential market share gains for OPEC and its allies moving forward?
It's all about capital discipline right now. If you look at the past 5 to 7 years, ever since the 2014 downturn, many companies in the E&P space have been looking for the answers. And right now, investors have been telling them, we want you to tighten up the balance sheet, be a lot more conservative with your capital allocation. And it's proving to be a pretty good strategy. Right now, the energy sector is the best performing one within the S&P 500 and many European markets. And even though some of the big majors like BP and Shell have lagged the broader energy sector, we think right now that's just due to hesitancy around the Delta variant. So we think there's going to be a lot more investors starting to pile into some of those big energy names. And we just saw BP. They announced that they were going to pull in their master limited partnership in America, BP Midstream, because they thought the shares were undervalued. So that's a good sign right now. We're seeing earnings tick up. Buybacks are also increasing. These are all positive signs right now. In terms of what that means for OPEC, I think right now, because production in the US specifically is a little bit lower, it gives them a bit more runway to be more conservative with some of their policies. So usually some of these OPEC countries, oil does drive a lot of the fiscal policies they have in place. So usually they need $60 to $80 of oil or north of that to break even. So it's given them a lot more runway because that US shale production has not increased. So for OPEC, this is a great moment.